took 100 prop firm challenges and spent $41,152 and made every mistake possible. But now I'm funded $1.7 million and am financially free from prop trading. And if I had known these 8 things that I'm about to share with you, I would have gotten there a lot faster and saved myself a lot of money and a lot of frustration. In this video, I'm going to walk you through the biggest mistakes that traders make, the simple shifts that changed everything for me, and the exact strategy I'd use if I had to start over today. So let's go ahead and let's get into it. So first things first is something that I overlooked early on is choosing reputable prop firms matters a lot. Nothing can be more destroying psychologically or to your profit and loss as a prop firm trader than paying the expensive prop firm challenge fee, going through, doing the hard work, spending the time at passing the challenge, and then being denied a payout for some BS reason. And unfortunately, there's a lot of shady actors that have entered the prop firm space because it's a profitable business to run. Now, there's a couple things that you could do to minimize your chances. I love this website, propfirmmatch.com. I'm sure a lot of you guys are already aware of it. You can come in here, you can click on forex 100K, and you can see a bunch of different options. A few things to look out for is, number one is to look for how many years have they been in business. Obviously, a company that's been around for 3 years or 5 years or even 10 years, the chances are they're doing right by their customers versus these fly-by-night prop firms that are popping up all the time. The second thing that I really like to look for is their rating. You can see that on Trustpilot here. They have it in this column, as you can see right here. A couple other things to look for is any prop firm that is allowing HFT or high-frequency bots. At the beginning, I made mistakes running with these prop firms. This is a huge red flag. Do not trade with any prop firm that allows HFT trading. They're not going to pay you out. Simple as that. Another thing to look for is prop firms that have nameless, faceless founders. This is really easy for a prop firm founder to hide, just like how in cryptocurrency projects, if there's not a name or a face behind it, then there's nobody to hold accountable when things start going wrong. So I'd be wary about trading with prop firms that have nameless, faceless founders. And one other thing just to be aware of is to stay away from prop firms that are way cheaper than market average or way easier to pass than market average. I also made this mistake early on going with really cheap prop firms or going with prop firms that were really easy to pass. And a lot of these prop firms just don't have sustainable models. And if enough good traders come onto their platform, they're not going to be able to maintain payouts. So first things first is this is maybe the biggest edge that you have is in actually choosing reputable prop firms that have been around that are actually going to pay out. Don't make this mistake. Number 2 is to take on the prop farmer's philosophy. The way that I could best explain it is to explain this parable from the Bible. Some of you may know of it, called the parable of the sower. And it basically says that there's this farmer or this sower that's out there sowing his seed or planting his seed. And he says that some of the times that he plants his seed, some of the times the birds eat it. He says some of the times that he plants his seed, it falls on rocky places and the plants wither away. He says that some of the time that he plants his seed, it grows amongst the thorns and it doesn't catch a root and it gets choked out by the plants. But he doesn't let all of this discourage him. He continues to plant his seed and he knows that some of the time his seed falls on good soil and it bears a crop, and some of those crops yield 30, 60, or 100 fold. And you're thinking like, Adam, why are you telling me this story from the Bible? Well, because prop firm trading is much the same. I understand that I'm not going to pass 100% of the challenges that I take, and anybody that claims that they can is lying to you. Anybody that claims that they can pass even more than 50%, I would say they're probably lying to you, or they're able to do that on a really, really small sample size, and they're likely not able to do that on a large sample size over time. So long story short is you have to take on this philosophy, understanding that you don't have to pass 100% of prop firm challenges, and you aren't going to pass 100% of prop firm challenges. And here's the cool part, that's totally okay. That also means that some of the funded accounts that you get, you'll make no profits on. Some of the funded accounts that you'll get, you'll make 30, 60, or 100 fold, meaning that some of the funded accounts that you get, you may make a little bit of profit, a medium amount of profit, and you may make a lot of profit before it eventually dies. Like all plants eventually die at some point, your funded account is eventually going to die as well. The philosophy shift here is instead of trying to hang on to this funded account forever or trying to pass, the highest clip of possible and thinking that you need to, the shift is to start thinking like the sower in the Bible that you don't necessarily have to, and you can still make it work. Okay, the third thing is that speed is king. okay? What I started to realize later on in my prop firm journey is that I want to be able to pass as quickly or fail as quickly as possible, mostly because I'm hedging. I'll talk more about that in a second. But anytime that I have my money that I've paid for a prop firm challenge and it's in the challenge phase, either through phase 1 or phase 2, then it's not actually earning any money. It's kind of in this limbo phase. And so I want to get through this point as fast as possible so that way I can actually have my money actually making money versus just kind of sitting in limbo in this challenge fee. And so one of the things that you could do to pass challenges faster is to trade high volatility pairs. I started trading things like XAU USD instead of trading pairs like Euro US dollar because they just move a lot faster and are going to allow me to pass my prop firm challenge faster than sitting in a pair like Euro US dollar. Now, the fourth thing that goes along with this whole concept of speed of king, but is optimizing your risk to reward ratio. So I played around a lot with this, around having a negative risk to reward ratio, having an even risk to reward ratio, and then having a 2-to-1 risk to reward ratio. And what I discovered is that the optimal would be, for optimizing for speed, we'd try to risk whatever the max daily loss is, 5%, and try to go for a 10% profit target. Now, if you do that, prop firms have these soft rules and they may consider that gambling, so you may not want to do that. What I found is kind of the sweet spot is to risk like 2% and to go for like a 3 to 4% reward. Most prop firms don't have any problems with you risking 2% in a trade and going for 3 to 4% reward. This should fly under most prop firms' radar and is considered generally healthy trading practices. Now, I will say that throughout my journey, I did try to go for a 2% risk and a 2% reward for a while, and I noticed that my funded rate really dropped a lot when I went for the 2% strategy, and more importantly, I got stuck in these challenges for a long time where fees just basically ate me alive. Because as you can imagine, if you go for a 2% risk, 2% reward, you go back and forth for a long time without actually making real progress. So this definitely affected my funded rate, which I'll talk about later on. And my funded rate likely would have been higher had I had not gone down this rabbit hole. The fifth thing is to always be hedging, okay? If you're not familiar with what hedging is simply when you buy something to protect yourself against something else. For example, you may buy yourself an umbrella in order to protect yourself against the rain. It's generally something that's smart to do. Now, in trading, the way that we do this is instead of just trading our prop firm account like most people do, and when we fail, we lose our, say, $500 test fee. Instead, what we'll do is we'll trade a small account with our own funds with like $1,000 in it, and we'll take opposite trades. So if we take a buy on our prop firm account, we'll take a sell in our hedge account. Or if we take a sell on our prop firm account, we'll take a buy in our prop firm account. And the idea here is that if we fail the prop firm challenge, instead of being out $500, now hopefully we'll make back that $500 in our normal personal account. This is the idea behind it. And I was looking at my 100 challenges that I've taken, and I've been able to recover 89% of prop firm challenge fees, of failed prop firm challenge fees, that is. So just think of it like, hey, if you could get a 75%, or in my case, I've gotten an 89% discount on your challenge fees, how much more profitable would you be? And how much more psychologically easy would it be to trade a system, knowing that even if you fail, you're not losing any money? And that was the biggest thing for me, was that when I did start doing hedging, psychologically, I could scale up, and I felt more comfortable taking more prop firm challenges at the same time and scale up my prop firm trading business. And not only was it a psychological game changer for me, I made a lot more profit had I had not been hedging. And also, the drawdowns are a lot smaller, which I guess will lead me to my next point, which is point 6, be prepared to go on losing streaks, right? And I actually, throughout this 100 prop firm challenges, I went on a journey where I actually lost 14 prop firm challenges in a row. And you may be thinking that's pretty tough. And it was tough, but because I was hedging and I wasn't losing money necessarily when I failed the challenge, that's what allowed me to stick through this drawdown period, or this losing streak of losing 14 in a row. And again, this is one of the other benefits of hedging. My drawdown, right, would have been $500 times 14. That's like $7,000. I would have been like $7,000 in prop firm challenge fee drawdown. But because I was hedging, I was in very shallow amount of drawdown, if any at all. And that allowed me to psychologically push through this losing phase and continue on. Now, throughout this 100 challenges, my funded rate ended up being about 26%. And some of you may be thinking, well, that's not that good. And my thing is this: the industry average is like 6 to 7% funded rate across a lot of different prop firm data that I've seen. So my numbers are like 4 times better than 3 to 4 times better than the average, 300 to 400%, which is really good. And I'm not manually trading, right? I'm trading algorithmically or with a robot. And if you're interested in seeing more about that, how we've done that, now helped 1,000 people pass prop firm challenges, go to blueedgefinancial.com. You can see the demo there, or we even just came out with a statistical white paper about the effectiveness of our product. If you're interested in looking at that, just blueedgefinancial.com. You can see the white paper on the top there. But my point being is 26%, if you're not hedging, is psychologically challenging because 74% of the time you're losing. And some of you guys may be like, well, that's not very good. And the best guy that I know that's been like paid out millions and millions of dollars, his funded rate was only 29%. So for those of you guys that think that you're going to pass 50% over a large enough sample size, you're not. Trust me, you're not that good of a trader. I promise you that, okay? And you're not going to get around 50%. I don't know anybody that over a large enough sample size has actually done that on reputable prop firms. It's just unrealistic. So number 6 was just to prepare psychologically for losing streaks. You know, this was psychologically difficult for me, and I probably would have quit and given up had I had not actually been hedging. And I know you may be wondering, like, Adam, what has been the result of all of this? What I've noticed so far, the average value of a funded account for me has been $6,754. So my fee to actually get a funded account has been, it's almost like risk-free, right? Because I'm hedging in this case. Oh, and other statistics, I'll talk about this in just a second, but my average prop firm challenge fee with discounts and everything for 100K challenge was about $411. And if I only get funded 1 out of 4 times, because my funded rate's 26%, just bear with me here, $411 times 4, that means that on average, it would cost me like $1,644 to get a funded account. That's without hedging. And my average value of funded account is currently at over $6,700. That's a pretty good ROI, right? That's like over a 400% ROI. And a lot of these challenges are continuously going and making payouts at that. And again, all the statistics, if you want to see more about that, we have it on our white paper at blueedgefinancial.com. So number 7 thing that I learned is to do whatever you can to minimize fees, okay? Prop firm challenges, almost all of them, you'll be able to find a discount code at any given time. Whether that's finding that on Twitter or just doing a quick Google search or looking on YouTube for influencers that may be promoting it and have an affiliate link, you can almost always get a prop firm challenge cheaper than whatever it is listed on their website. So make sure that you're taking the 5 or 10 minutes it takes to actually find one that's working and just actually do that. The second thing that you can do to minimize fees is to avoid really quick term scalping, okay? A lot of the prop firm brokers, they have higher spreads and commissions than a lot of other traditional brokers, I'll say. And so scalping can really hurt you because in order to make money scalping, right, you have to take a large lot size trade and you're trying to get it to move just a short amount of pips and then you get out of the trade, right? And so fees, when you take a large lot size, are higher and it moves less pips, a greater percentage of your trade is going to be paid to fees. So it's advantageous to not be scalping really quickly and to hold your trades for a little bit longer, take profit. This will definitely affect your P&L over the long term. Number 8, last thing here is to diversify across prop firms. So if I were to do this over again, one of the mistakes that I made early on was just picking like 1 or 2 prop firms that I felt like were the best ones, kind of had the best deals, best profit to drawdown ratio, best price, etc., best reputation. And I went deep with them. So I went and I got like max funding on a couple of these prop firms. But the problem is if you get, God forbid, banned from a prop firm or a prop firm goes under or is having issues and they're delaying payouts or anything that can happen with prop firm trading, let's just be honest, it's the wild, wild west and any of this stuff is a plausible situation, then it would just wipe out your business, right? If you have $800,000 in funding, but $400,000 is with one prop firm and that prop firm for whatever reason has an issue, then boom, 50% of your funding is gone like that. So instead, what I would do if I were going back is I would go wide first and then go deep. So I'd try to take it like 5 different prop firms, taking 1 on each of these 5. Instead of taking like 2 and 3 on just 2 prop firms, I go wide to start. Then once you feel comfortable with the prop firm, you've gotten payouts, or you've passed their interview if they have an interview or passed the KYC, whatever that is, then start to go deep after you have like 5, 6 that you feel really comfortable with, then start to go deeper after you've gone wide to start, just to diversify your risk early on. Hey, if this video is helpful, like, subscribe, turn on post notifications, and we hope to see you in a future video.